Welcome to Stock and Options Trading Unlocked.
If you want to learn how to make 6 or 7 figures a year trading 2 hours a day, this is the show for you.
We're here to talk about everything trading, weekly news, tips, and special guests to get you motivated and profitable.
Don't forget, everything you hear is opinion only and not to be considered financial advice.
Here are your hosts, Atul Patel and David Picard.
Okay, we're going live. Hey guys, how are you?
Doing well. How you guys doing?
Looks like we got a little extra. Let me close this out. If I can close it. There we go. Okay. So welcome everyone to our Stocks and Options Trading Unlocked show. We're hoping that for those of you that are coming to the show or will find it helpful, you're going to learn something from it, and then just give it a chance to even release. And for it's been a week, right? So if you want to share some stories, be sure to type in the chat at YouTube or on Facebook/EdamMLC, and you'll be able to type in the chat there, and we'll be watching that to respond. And so let's get this started. Hey guys. Hey David.
Hey, how's everyone doing today?
Good.
Well,
Hi,
what's
Wes.
going on? Bless. Thanks for coming on.
Mo.
Hey, thanks for having me, guys.
So welcome. It's been we're in a crazy volatile times right now.
It's my favorite. Yeah, I mean, I love the range. It's
The range has been
amazing.
ridiculous. Ridiculous.
It makes my account go you know where, so I love it. It's the
I-
best.
Honestly believe like this year, by the end of the year, it should be a 10x, 10 to 20x on the big account. I feel like that's very possible today, given this range that we have this year. So while folks are maybe stressed about the up and down, the wild range, things that have worked in the past, where you can buy and hold or buy every dip and things will just start in 3 months, 6 months, it's grinding, new all-time highs happening. Markets changed, right? We're actually at the in the world of momentum, which there's a way that there's a cycle going on, and so we're kind of I believe that we're at the cycle point where we're still not even done with the drop that happens in momentum. So all the buying momentum has happened. Now we need the panic, right? I don't feel like the true panic is set in yet, and so we still have, I think, more downside coming. But we can take advantage of it, right? And so when you learn and develop the skills, you can still kind of take advantage of this crazy market. And I don't know if folks saw it, but like in the starting soon screen, you saw that scrolling on the right, and what we were able to develop for this was where we're actually pulling that data straight out and live from whatever was typed in Discord. And you can see if you go and see that, I'll be posting that somewhere on the website, so that'll just kind of be up to date. And for the privacy of the members, we've blurred out the names, but really wanted folks to be able to see what's possible, and that some of the members are killing it, and some of the new members are even killing it, like that I was like, wow, with proper planning, you can do some real good work with your accounts. So you've been on fire, David.
Trying to follow the process and keep focused. Honestly, the numbers come. It's just staying away from focusing on that, honestly, because that's what gets you, in my eyes. Focusing on what works for me really well and just trying to nail it and really remember that that's what's important to me, is getting that right. Everything.
No, so let's talk about what we're going to go over today. Let's get right into it. So we have the our agenda. So we're going to start off and we're going to talk about we'll do a little bit of market madness. and then it's where we'll talk about what's going on in the market a little more. Then we'll go over some $1,000 bets. So you don't have to risk your whole account when taking trades, right? When you plan trades, there's with good risk reward, you can take $1,000 bet, and I want to show what's possible with proper planning, and you know what's going on. And these will be trades that we took or shared with folks over the course of the last week. Maybe I think most of them are from today on this, but then we'll go over it. We'll meet our guests, get to know a little bit about Mo and Wes, and then finally we'll share our tip of the week. And so for those that know me, I don't use a lot of indicators for my trading, right? And the only true indicator I use on a regular daily basis is VWAP. And so we're going to talk about VWAP today and what makes it so special. So with that said, let's get right into, see if it works. This is my first time doing this thing here. You ready?
Up next, Market Madness.
Market Madness. Okay, so let's what do you think, Mo? What do you think is going on with the markets right now?
What do I think is going on?
Yeah, it's a little crazy, right? Like, look at the range we had today.
Risk-off environment, especially when it comes to growth names. You look at these names; they've been on a parabolic run for the past decade or decade plus, right? It's a combination of things. Some of these companies, their valuations reach a little too high without them being profitable. When it comes to mature companies like Netflix and Facebook, their growth seems to be slowing down a bit. Amazon too, now that you think about it. Right? This quarter, Amazon's sales growth was the slowest in about 2 decades. It's a bit of a cyclical thing, right? Every few decades, the top growing companies, they kind of turn into mature business models and become boring dividend-paying players. And then new companies emerge and they're going through a bit of that seismic shift that people don't know what to make of it, what multiple they want to apply to these companies. But it's giving us a lot of range for us.
So but we ripped this today. We ripped. So doesn't that mean that like we should be going up now?
Of course.
Where did we rip to? Think about that. Rip to 4,300 on, yes, pretty much the Monday high. We ripped into a key support level, which acted as resistance, and we ripped ahead of key ER releasing. There was a lot of hype, and then we sold off. I think we dropped like 30 points from that 4,300. And the ER that came out after that wasn't very pretty, so I don't think we're going up in a straight line.
So yeah, we're getting some crazy range, right? And you know, the market has shifted, or I think the market's definitely shifted, and it's now in hunt of what is the new multiple. What is
I think
for
it's
investing?
about
What's the okay?
valuations right now.
Yeah.
And I think you brought up a great point, Mo. There's a valuation kind of reset happening for certain companies based on maturity. But then we also have, you know, geopolitical impacts. We have economic impacts. You know, we've had inflation that's going to catch up after helicopter money. It's just, you know, so many factors going in, and it's all weighing in on different resets of valuations. So yeah, I think that's a pretty good spot on read, and I think it's going to be vicious. I think we're going to see some vicious bounces and then the falls for a little bit here.
Yeah, no, I'm excited. I think this year could be the year to, like, if you learn how to do this, it's almost like you're getting the kind of range that sometimes you would wait all year for, and we're getting it in days.
Yeah.
And we're getting it over and over and over again. So if you think about it, if you learn how to manage that and trade for that, you can almost do a year's worth of work in a much shorter period of time, right? And so we'll see how things go, but I think it's going to be pretty crazy. It's going to continue to be wild, right? I don't think it's going to be easy. I am starting to hawk though. I am starting to look at some of these companies that, based on their cash flow, that might be great long-term buys. And I'm talking for the next 10 years, right? And so I don't know. I'm not saying buy tomorrow, but I'm saying is that somewhere in this year we should have enough of a drop where, like, what is like that phrase that I love to say, where it's dumb not to buy. It's like the risk reward. So everything I kind of do with the trading is I'm always looking for risk reward, and I like to look for outsized reward to the risk. And I think we'll get that. I think we're going to get there. And sometime in the next 3 months, I think we'll get some names at some, like, it's just, they've got so much cash coming in, it's dumb not to go for that. And there's a lot of unknowns about what's going on with Russia and Ukraine, and does that trigger other stuff, and the rise of China and all that stuff. So any other names? Like Elon bought Twitter. What do you guys think about that?
Got a funny message today about it. Someone sent me a picture of him from when he was young, and they're like, he spent 43 billion to make sure people couldn't tweet this.
I need to see that.
Yeah,
I think he has too much free money.
It's a power move. I mean, this is what the big guys do. They buy media coverage, right? That's the next step in control.
Yeah. No, I think it's a lot. He spent a lot. Probably could have got it for a lot less. But I don't think Elon's dumb. So I think this is a step toward some other thing that we may not know about, and it should create it. Yeah, it should give him some leverage in the future for whatever his mission is, for why you would be able to accomplish that or spend that much money on something.
Time, effort, money, effort.
Yeah.
Right, he wants global domination.
The so on the checklist on the way to Mars, buy Twitter. Like, what? It's on the checklist. It's like, okay, guys, I got that part done.
Digital World went up $6 just now. DWAC did.
DWAC did? Wow, really?
Yeah.
So is it at like $12 now? No, I'm kidding. Like, I'm waiting for 12. It's horrible. But maybe it goes. Maybe it starts going. Like, Apple's getting a bit of a recovery, but it dropped to 153. Back at 158.
I don't want a huge gap down. That's fun. Gap up so.
What do you guys think of the after hours action on Apple? It traded in a 16-point range.
Well, I mean, for Apple, it's kind of a decent sized move, but I mean, from a percentage wise, it's not that much, right? 10%. And, but the crazy thing is a 10% move on a $2 trillion company.
2.7 trillion.
Yeah, almost 3.
Yeah.
I mean, it's only $200 billion. It's literally moving the market. It's like the market cap of Twitter.
More than Twitter. 200 billion.
Four Twitters are moving in this range, right?
No, that can move the market.
Right. And so we'll see.
Yeah, Apple is like 6% of supply.
Yeah. I am kind of hoping that we get that a flush out into like 135, 140. I doubt it comes, but if we do, I kind of like it there.
I would probably pick up some leaps, honestly.
Yeah, I kind of like it there.
Maybe a year and a half, 2 years.
In 2 years, like everything I'm looking at now for leap size, I'm looking at 2024, maybe 2025 leaps.
Yeah, I do like probably 60, 70 delta or something.
Yeah.
stash it away until it starts moving and then sell some call against it. Poor man's covered call.
Yeah, the way for me is really I don't even have I do that. I just buy it and I just put it in an account and I put a stop and I forget about it because I can't look at it. It has to be in like another account that I never look at. It's like it's stashed, literally stashed away, because otherwise I overmanage it.
Agree.
Yeah,
I wouldn't do that in a day trade account.
Because the way we trade day trades, we see the momentum, we see where the spikes are going to happen, we see where the exhaustions are going to happen, but it's a lot of work to people getting in and out on a long-term cycle. Not to count just the short-term cap gains issues, but what if you're wrong and then you miss the next thing, the move, and your timing is off? It's hard, right? So it's just the way I've found I have to do it. So you guys want to go into doing some $1,000 bets?
Yeah, let's see what we did today.
Like, let's see, like what there were some interesting opportunities, and so let's move into it.
Up next, $1,000 bets.
All right, $1,000 bets, guys. So Mo, I saw that you looked up some trades from our morning session here and found some amazing opportunities. Want to share some of those?
Yeah, so today, as you know, I had a pretty big drop right at the open. Right when it was breaking through our key level, we could have gotten the 8 puts for about $8 or $9.
Mm-hmm. That's what I think.
And
I got it for 10 or 8 to 10. Yeah.
Yeah, and they hit a high of about $36 about 25 minutes later when it approached 400% in half hour, 25 minutes.
Yep. And then where could you plan it would go to? Where did it go?
Where did it go? It went to our almost reached 820 level. 824 a day. It's just piercing through support after support. Pierced through 60, 50. Like it was dropping fast. A lot of momentum.
Yeah, it just dumped, right?
Yeah.
And so the way that we do our $1,000 bets it's like, hey, if I had $1,000 and I wanted to throw it on something, and I saw the setup and I saw the opportunity, and then looking at what could it made if it went from the level where we're looking at the entry and the level it goes to, right? And in this case, you could have picked it up for $8 or $10, so $800 or $1,000. And then when it got to the 820 level, I think it was 821.50 or 60, right? And one of the big things I look at is when you see an acceleration like that, you take the profits. Don't worry about the last dollar. Like it's close enough. It's good enough. Don't worry about that extra $5 or $10 because it's huge.
You got 80-90% of the move. Who cares?
Who cares? Exactly.
Exactly.
And so the oops, let me see. Okay.
Well, I was very proud of your confidence today in that. Did really well.
Thank you. Yeah, I noticed some people were going long, but I want to share my sentiments. Sharp biased.
Yeah, that was good. It was good.
Yeah.
I was looking for a scalp to the long side, and that was me. So yes, and I did lose on that trade, but it was within my risk reward and the stop. And I was looking because I wanted a pop from the level to go back to VWAP. Then I wanted to get back on. I wanted to join that short play. But Mo's read on it was we're just going to keep selling. And sure enough, though, you know what? I have no ego on this. The price action, I was wrong. I flipped, joined to that short trade, and did incredible on that. I did really well today on this, and we wrote it down to our level, the target, right? And then after that big thing, it was kind of like, hey, we just got paid, and it's about an hour of the day is over. I think we could be done with our trading day, less than 2 hours a day. And crazy account growth. Like one of my baby accounts was like over 100%, like and not trading crazy, and just following the process. And I was like, oh, hey, that's cool, thank you. But back to that 1,000K bet. So that was $1,000, and if you wrote it all the way up with one contract, or when it got to the 820, you could have sold it for about $35. Let's say you got out early and you sold it for $25 or $30. Let's just say even $30, right? Not even 35. So that's $1,000. Using $1,000, you're able to then sell it for $3,000 at $30, right? And how much do you pocket?
$2,000.
$2,000 using $1,000. That's not bad. It's not bad work. I don't think it's bad. So I thought that was pretty phenomenal. The similar thing happened with I started grabbing 800 puts. Right when the other thing started dropping, I started rolling into 800 puts, because my thinking is if that 820 breaks, we're probably going to go to 780 to 800. And so to me, those were cheap bets, because if that played out, those would have gone, been up huge, right? It would go from $5 to $20, but they didn't get there. But at the 820 level, they got to $15. So that's still, I take two contracts at $4 or $5, same situation. I just wish when I grabbed the 850s that I also grabbed the 800s, because like I probably would have got them for like $2 then, and that would have been an incredible trade. So what else you got? What other $1,000 bets?
If we go back to last Thursday, S&P tested 450. 450, sorry.
Yeah, I remember that call out.
That rejection, we dropped 2,400 points for the next 2 days. So on Thursday, if you grab, let's say, the 4,450 SPX puts, you could have gotten them for $3 to $4, right? Near the 450 spy level.
Yeah, so let's just say you got two of them for $5.
Yeah.
Okay, so that's
$5,
$1,000.
yeah.
Where did those go? Per the levels. Okay, let's also let's talk about planning. Okay, if the market was to drop off that 450, then do you remember what the levels below were?
I don't remember all the levels in chronological order. I mean, I do know those contracts ended up going to $160.
They went to 160, right?
Right, which is insane. But even if you didn't hold for that big move, it's a pretty big drop.
Yeah, if you closed end of day, I remember those went to $100.
I think it was like 60 to 70.
No, I'm sorry. I'm thinking about the 449s. I was in the 449s from 15 to 100. So yeah, you're right. The other ones went to 60. So yeah, that's still great, phenomenal, right? Yeah. You have two contracts, right? That went to $12,000.
1,000, 12,000.
Yeah.
It's the beauty when you get crazy range. Really wide range.
So that's the opportunity. But so what you got to do is you got to look for those gap ups, right? And that was the key for me, was that gap up reversal. It's one of the killer trade setups that I talk about with the watch list levels. Is that when that opportunity sets up, you have a huge advantage to just let things play out and go to the levels, right? And so there's a difference in the trades between when you look at the daily and weekly charts, there's key major levels, and those are immense opportunities for 1-2 day swings when you get big reversals that happen. So we even got it this week, actually, yesterday. Off the 416. Remember that 416 level?
Well, and I got
Actually, even this morning was 417.
Yeah. Yesterday, I had a good setup off the 422 off the early rejection, had a nice double top. I took the 422, the 4220 SPX puts for $20, risk 250 to the low of the contract. For those $1,000 risk, took my first off for $8 profit, my second for 2,800 profit.
Yeah.
So
Very nice. Very nice.
great risk reward there.
Yeah, some pretty amazing risk reward. So this range is just incredible. Like I'm, but even then, this right, we had the 416 triple bottom, we had or double or triple bottom on the daily, and then we have a higher low established at 417 today. And then I think I wasn't trading the afternoon today because of the amazing morning, we had. But I think there was a crazy trade, $1,000 bet trade potential based on our process because of the consolidation that we had. Once 420 was key. After 416, we had 420 reclaim, and there was VWAP right there. And we're going to talk about VWAP today and why it's important. And it consolidated and then started crossing that 422. And I believe that trade, there was an opportunity there. Let's see, where was it? Oh, no. Okay, you were that was from last week, I think. No, talking about the 420.
There's one from Monday too, right? 'Cause Monday SPY reclaimed VWAP after lunch, consolidated on 422, right?
Oh yeah, it was the same thing.
Yeah, similar setup to today.
Similar setup as
During
today,
that
yeah.
422 consolidation, you could have gotten the 4250 SPX call for about $6.
Yeah.
Which ended up going to 40 plus as it ripped. Because once it ripped about 422, we got to 428.
Yeah, so we couldn't do $1,000 bet on it. We could do 600 with one contract, but still that went to 45. So $600 to $4,500, right? And so that's the high about But so if you, I think, oh yeah, that was my notes. That was right. That was like, that was Zoltar day. I think was that Monday.
That was Monday.
That was Monday. Zoltar. Looking for the gap down reversal pop. Yeah, that's right. Sorry everyone. I forget. We have so many trades and setups and opportunities. It's just been one sick day after another. But for those that aren't aware, so I had planned out that I wanted to buy the dip at 420 to 422 on Monday, I believe it was, and looking for a gap down reversal, targeting a move up to I wanted 430 to 432 by Wednesday, and we ended up actually continuing selling yesterday. But if you just look at the risk reward, we still got that 428, 429 target from 42022. So that worked out amazing. Just didn't get that last little bit. Still a little bit bitter on that. But I like being right. So but it was still a sick trade. Sick stuff.
Facebook was good today.
Yeah. Facebook was clean. We had a lot like it's the earnings season. There was some really clean. Oh, you know what? Which was a great one. I didn't take $1,000 bet on it, but it worked out well. Was Boeing this week? Remember that dump? And I was we were looking for it to go toward 140, and I think it got down to 146. And so from our planning, it was a $15 move. We didn't quite get the $20 that we were looking for, but we still got $15. And so that was kind of nice. And so I think those contracts went from $4 to $8 or $10. Still not bad. Double. If we can get these, 200, 300% regularly, it's fine.
Double.
Huh?
No one ever complained about a double.
Yeah. Well, maybe. I, I'm guilty. I take them, but I'm like, "Ugh." But you follow whatever the process gives me, right? So let's see. So those are a couple good ones. What else do we have? Um, Now that I did not pay attention to. So the wildest one of this last week that we saw, and actually it was about a week ago. The 445 puts on SPX for $3 when it hit that 450, right?
Yeah.
Those went to a high of $165 from 3.
It's dirty.
So if you think about that, Wes, $3,000. No, I'm sorry, $1,000. 3 contracts to 165. So you spent 1,000, 3 contracts that would have been worth 16 plus 16. 32 plus another 48,000 or so.
49.5 actually.
Yeah.
Wow.
Tell him. He counted those numbers.
What?
Maybe you should talk about Tesla the other day.
Oh, well, that's
You had a beautiful setup you saw. We could talk about that.
We dug a grave and threw all those indicators in there that have been holding you back all these years. So.
Yeah. So that's actually a good thing. So why don't we do a quick introduction?
VWAP, by the way, everyone.
Yeah.
Only VWAP.
Yes. Let's do that
though.
though.
With him, and I was like cross-eyed from looking at his chart. It's like, let's get rid of these.
So why don't we go ahead and shift and let's introduce Wes, and we'll move on from $1,000 bets to talking about our guest. So hey Wes, you want to tell us a little bit about you?
Sure. I got into trading probably 18 months ago. Had a friend who was trading on the Robinhood app, and I had a lucky start, and then kind of blew up an account and started looking on Twitter for a room to learn from, and just like so many people, just bounced around from Discord to Discord, and a lot of them are pretty much alert rooms that I guess they offer some of the basic teaching, but it didn't. I never was consistent, and I saw that was kind of a story with a lot of people like me who was bouncing around from different rooms. So, and as far as what really, other than following the process and getting rid of all these indicators, but looking at the risk reward of every trade and following this process has really helped me come quite a long way. So,
Yeah, well,
since I started the account, I think it's up 30%, but a lot of that is in the last week or two. So,
you're putting in the work to follow
the process and reporting your trades. And really looking at the risk reward of every trade you take has really made a difference for me anyway. So
yeah, I mean it's a concept that I think every trader really needs to embrace, right? Like if you're gonna get into a trade, if you're gonna risk $500 or $1,000 on a trade, it better be worth it.
Right.
Right. I'm not. Why are you risking $1,000 to make $100? That makes no sense to me.
I might have gave Wes a hard time.
I needed it though. I mean, that's.
Yeah. So did you expect to have folks that would actually kind of reach out and maybe beat you up a little bit and tell you, hey, here's what you need to change?
I mean, it's a supportive group, so the support's there when you need it, and that's. And sometimes if you need to get beat up, that's there too. But
but in a good way, right? It's all in a good, constructive, or
absolutely. So it's and just it's the proper process. I mean, I know for the longest I didn't even have definitive targets and a stop loss. So if you have, you have to have a plan before you trade, and I did it for a long time, and that's just one of the things that's helped me a lot. So
That's awesome.
so
Well, what? Well,
it's a working process.
Thank you for coming on tonight, and I'm glad you found us and have joined us, and it's great to see your growth.
I appreciate all the help.
Wow, Mo's back, and he is.
Dressed.
I think he looks. He looks.
Was that a nightgown you put on or what?
He's a very. He looks like he got his BMW shirt on, and he's got the glasses, and
I better make sure my car's in my garage. So.
yeah, like you're looking pretty sharp there, buddy. Where are you going after?
Yeah, I'm gonna probably go get some milk for babies. That's how exciting my day.
You never know.
Resting Thursday, going for some milk.
Exactly.
Yeah.
I'll probably stop by.
I gotta dress up to go get the milk, honey.
Yeah, there's some hot chicks that come to my local shop.
Horrible.
You gotta be presentable. It's okay.
That's amazing. That's hilarious.
What I missed? Sorry.
No, we were just introducing Wes, and so great. And the so Mo, do you want to tell let's, I think we can move into the tip of the week, but like your thoughts on VWAP.
VWAP. One of the few indicators that professional traders do. By professional, I mean institutional traders. What the VWAP represents is when hedge funds or the big boys want to buy anything, right? They submit their orders saying, I want, let's say, 10,000 shares of Tesla at VWAP. Now, these orders get routed to investment bank traders. Their job is to buy as close to VWAP. Once you see buying or selling pressure based on orders building near VWAP, you'll see price divergence from VWAP in either direction. You'll also see VWAP start curling towards that direction too as the market goes. With that being said, VWAP is good in terms of seeing whether things are trending up or down, but it should not be the only thing you look at. It's isolation rate. You don't want to look at VWAP without context. You want to have a trade plan that's really based on market sentiment, larger time frames, because VWAP is intraday indicator. It's not something you want to try to use on multiple time frames. It's nothing. It resets at the end of every day. Your trade plan should be not derived off of something above VWAP. It should be based on whether things are trending up or down based on key levels, support resistance, etc. And then you can use VWAP as a guide how prices, diverging away from VWAP or it's going up. That's how you use it as a signal confirmation. When I started trading, I would see one candle below VWAP, I'm going short. Next candle above it, I'm going long. Next thing you know, I'm getting chopped up left and right.
On both sides.
Both sides.
You're getting gaped on both sides.
Exactly.
Feels good, doesn't it, Mo?
Oh yeah. That's basically my style. When you see things reclaim VWAP and they put in a higher low, good risk rewards go along. Or if something breaks down and puts a lower high against it, good risk reward. But you can't just blindly chase candle above or below.
Yeah, you got to have context. You got to look at So the big thing is that a lot of folks, I think, just go, oh, it's up or it's above or below VWAP. It's not. I don't look at it as above or below. I'm curious to see what is the price action in reaction to VWAP. Yeah. Right? Is it holding over VWAP? Is it rejecting VWAP? Is it dipping and finding some buyers at VWAP? It's really amazing. You look at it as is momentum shifting on it or not, right? and that's really where you can use it, because a lot of times when you have a strong trend, things can come back and test VWAP and get rejected and then continue in a direction, and those usually turn out to be really strong trends when you see that test and rejection. Sometimes it can't even get to VWAP, right? And it's so much sell pressure or buy pressure, and being able to recognize that behavior is huge.
Yeah.
And then there's a little tip that I think a lot of people don't pay attention to, and sometimes I forget to too. I got reminded today by everyone, by a couple of folks, the angle of VWAP. So if VWAP is just like a slight up or down, just a little bit, and you've got a large range move, that can tell you that, hey, there's not a lot of volume behind the move, right? Because what is VWAP? It is a volume weighted average price, okay? So that means if the volume is building and continuing at a more expensive price or a cheaper price, like more expensive if it's going up, cheaper if it's going down, then when more volume is increasing at the range, then VWAP is going to be, like if you're buying on a highly buying, VWAP angle is going to be like this. If they're highly selling, VWAP is going to be down like this, right? But when you see that angle, it's telling you that there's a lot of late volume or increasing volume at a higher or lower price, so that's going toward a direction, so that that move may sustain, is what the point I'm trying to get at, for that next period of time or window that we're looking at. And so that said, so I think we've alluded a little bit to it. And so for those that's VWAP is pretty much the main indicator I use, or the only one I have beyond my levels. I do my analysis, figure out what the levels are, then we look at what the price action is. We do our planning about based on the levels, and then use that VWAP as a guide. But that's it. I'm not using moving averages. I'm not using all this other stuff, because the rest of that is all in the chart. Like if you learn price action, if you learn the price levels, what is that an indicator is built on? What is it translating? It is translating price and volume.
I mean, indicators are noise, honestly.
And then they're lagging.
It really is.
They're lagging. They're not predictors.
Correct. And they just cause analysis paralysis. If you have too much going on, it's hard to actually read the price action, the context around what's important, and make a decision, right? And sometimes it makes it hard to stick to your plan, because you'll question, because you're going to have 6 indicators flagging 3 different things. And you're like, which way do I go? Right, Russ?
It has stopped me out of so many winning trades too early that I could have paid my house off by now.
I'm not calling you out. I just want, reinforce it.
So I'm curious, how many indicators did you have?
Oh, I had a 9 EMA and two, three other ones.
You cleared out like 10 indicators. It felt like.
It wasn't that bad, but
my eyes were okay. It was probably 5.
I've seen a lot worse, but it's so much easier to see price action without all that. Also,
yeah, it's like it gets lost, right?
Mm-hmm.
And at least I think it does. And then because what happens is I think folks get so caught up in the meaning of an indicator that they forget to do the risk reward math. And then by the time that the indicator signals, the risk reward is no longer in your favor. And it's like, sure, it may work, maybe it doesn't, but if it doesn't work, well, how much are you going to lose? And how often does it work compared to doesn't work? Right? Like for us, our math and everything, it's literally like I'm of the opinion, like even like this long that I had today, right? Did you hear me even care or flinch about being wrong on that? Well, no, right?
No.
You called it out. You were calling it out. It's like, oh, I think it's going to drop. And I said, that's fine. I'm going to go. I have a plan. I'm going to go long here because I like the risk reward. If I'm wrong, I'm going to lose this. And if I'm right, it's going to go. This is where it's going to go. And I will. And, hey, I was wrong. It's within the plan. I don't care if I'm wrong. because if I'm wrong, I already have a plan for the other side. And so I'm like, oh, okay, I was wrong there. Now I'm flipping, and I can flip with double the sides because I have more confidence, right? When I'm wrong, because when I'm wrong, I mean, I have to go the other way, and it's not chop. It's in the middle of this volume or momentum move, and it's not at the end of the move. We're doing this at the beginning of these volume type moves. It's okay because I'm allowed to be. I can be wrong 2, 3, 4, 5 times, and I'm still coming out ahead. Because of the reward I get when we're right, and so this shift I've seen. Like I was talking to a few people, some of our students this week, and this shift away from being dependent on indicators is getting them to 80% win rates. Imagine that. 70, 80% win rates, and you're not dependent upon an indicator or 10 indicators. Crickets.
Hey, I'm with you.
Yeah.
What's your win rate been the past couple of days on curiosity?
I will go back and check. I think about 70%, but it's still a big improvement. It was
Where were you at before?
50.
50?
It was
Where were you?
50. Now it's about 65 or 70.
Okay.
So
Yeah.
that's a big improvement. And you
Yeah.
can face today. It rejected perfectly off the 205.
Oh, yeah.
Through the 202. And so when I went short at 202 down to the 196 was the next level.
Yep.
I mean, it blew past, if you had a 9 EMA, it blew past that, blew past the pre-market low. So you can have all that up, but it just levels are, to me, a lot more important. If you have all that stuff in between, it can cause you to have doubts about holding to the next level and really catching the ball to the move.
Start playing in traffic.
But it all comes back down to, like, why are you taking the trade? If you're going to take the risk, why not trade for the reward? Right? Don't take the risk if you don't plan on getting the reward. Right? And
Absolutely.
yeah.
And that applies to everything in life. Taking a risk. Gotta get the reward.
Why is it that when Mo
you really going after this, Mo?
Yeah.
Why do I feel like it's not for milk?
He's like, why do I feel like Mo's gonna be saying, "What's your name?" I'm taking a risk. I better get the reward. I'm Mo. Where are you going?
Well, we got some milk, dude.
You're going
That's
to
what it's called these days.
He's going to the dairy aisle.
But you gotta think about where milk comes from.
Oh, Mo. Oh, that's awesome. That's awesome. So, see, yeah. Anybody else have any? I haven't seen. Has there been any comments or questions inside of the? We're gonna definitely do a little bit of Q&A on VWAP if you guys would like. Let me see if I can bring. I kind of avoided showing that thing because I was a little worried that I might get audio feedback. Okay. Mute this so that there's can bring. Yep. I got it.
Anything else anyone has to say about VWAP? Any final thoughts? One thing I really love when I'm entering trades is I really love when VWAP and levels line up for me. That makes me
huge.
Really. I also love if I can have 2 levels stacked really close and VWAP on them. I like that a lot. And then because usually that means there's going to be a ton of distance between the next level. And so that allows me to have what I look for, which is killer risk reward math, because that's what I mean. That's how you get the great trades, great setups, and the entries, right? It's a reality.
And that's how you turn what 5,000 into.
Over 100, 120 in 2 months. Yeah.
I know. So he did. So David did that. Amazing trader. So I'm like, man. I'm like, if he can do it, I'm gonna do it with $1,000. Full disclosure, I blew that account up.
It's so hard, you have no idea.
Okay, like I'm like doing it at the $1,000 I'm like, I can't do that. I don't know how to trade that. That's so small. But like 5 or 10K, it's doable. It takes about take a month or two, but I think it's doable. So I've started one. We'll see if I get it there.
You'll do it.
Oh yeah, no.
It's I mean, honestly, and you can do it just trading SPY. Everyone.
Yeah.
I mean, that's the beauty of it. I'm hyper focused. I probably trade 1, maybe 2 tickers a day. That's it.
Yeah, and sometimes you don't even take trades on days. So if you don't see the setup, you don't take it. Trade.
I don't need it.
And you put your stop in, you walk away. I'm like, you're either So you're very, very disciplined about your trading, and it's made a huge impact since, like you came, right?
Yeah, follow the process, man.
Yeah.
What it's about.
Huge difference from once you joined the community. So, well, great. Well, I think that's let's see, what else do I have on VWAP that I want to share other than just guys, that's all you really need. Just remember, it's just it's where, like Mo said, the institutions, why VWAP matters is because institutions use that as a benchmark to how well their traders are executing trades from their their clients, right? So the closer folks end up if they have net buyers or sellers, the closer that they executed to VWAP is how they're measured that they did well for their client. So, for example, if I needed to buy 10,000 shares of something or other, and I get it within 50 cents of VWAP, hey, I did a good job. If I executed these trades and I did it, $3 away from VWAP or some percentage outside of tolerances away from VWAP, I might be looking for another job, right? Or the bonus is going to be tied to how close you're executing toward VWAP, right? So it matters because of that, but it also matters on the shift, right? And recognizing that shift. So, sorry?
I wanted to add that, institution professional traders are not buying far away from VWAP. Neither should you. Right? Sometimes people want to chase stuff which is way to like 4% away from VWAP, right? It's not a good entry risk for one buy.
Guys, how many times, day in and day out, I take a trade, I take profits at the levels, I wait for it to bounce back at the proper time, the VWAP, reshort, and go right back to or long, right to that level, depending on what the trade is. I mean, it's the most beautiful thing. Just follow the process.
It's amazing. Now we're intraday scalp traders primarily, right? 2 hours a day, make our bank and walk. But the tip I do want to give to those that watch this show or listen in is that if you're a swing trader and whatnot, the time you make that decision that you want to go long or short or something doesn't have to be the time you get in. So if you're like, wow, I really like this stock, I think it's going to run for the next 2-3 days or maybe the next 2 or 3 months, there's no hurry to get in. You can always be patient and wait for it to come to VWAP and buy. Because guess what? That's where the institutions do their work. So why shouldn't you? Right? So think about that. The time you make the decision to go long or short of a stock does not have to equal the time you enter a directional trade. Okay, so I'll leave that with that tip as well, little bonus. So thank you everyone for coming in and watching this show or listening in. Be sure to like and share and let folks know about the show and us, and send us feedback and let us know how we can help you become a better trader. Right? That's what we're all about. And so thanks again. And anyone like to add anything, or Wes, I know you have a couple businesses. I don't know if it's online or not, but if you wanted to plug yourself, feel free to.
Well, I have a local construction business, so our problem is finding enough help. So
Where are you located?
Where you look? Yeah.
By Nashville, Tennessee, actually.
Okay.
Anyone in Nashville that knows people looking for
Yeah.
labor?
So seriously though,
reach out.
if anyone has someone that in a trade that can help Wes out in his in Tennessee, get in touch. Right. Let's help. We're not just about stocks and trading. We're a bit of a family, and so we always want to help each other. So, in anything we can do.
Yeah.
So,
Thank you.
thanks Wes,
everyone,
thanks
for
Mo,
joining.
and thank you for watching, listening.
Guys, take care. See you next time.
Thank you.